Hey everybody, my name is Ty Franklin and I am a real estate investor out of Atlanta, Georgia. I wanted to jump on here real quick and share something with you all that I believe everybody should be doing if they're not already doing inside of their business. This will help you close more deals and not miss out on opportunities as they come across your desk. And that is utilizing or having the ability to utilize multiple exit strategies. So for example, let's say we have two separate companies, two separate businesses. You have company A, and their only strategy is wholesaling. You have company B, and they have access or the ability to utilize multiple exit strategies. Let's say novations or fix and flips or whatever the case may be, or creative finance, right? So company A reaches out to a seller lead and they offer them $100,000 cash offer, right? The seller is kind of on the fence about the offer, but the seller is listening to other offers. Company B reaches out to that same seller lead and understands that they can pay a little bit more by utilizing a different exit strategy. So company B offers the seller 150,000 and company B is still able to make money on that particular deal. Now, who do you think the seller is going to work with on this deal? Company A that offered $100,000 or company B that offered $150,000? Both companies can make profit, but company A is going to miss out on the profit and leave money on the table because their only exit strategy is wholesaling. So that is why it is important to have the ability to utilize multiple exit strategies because you're not leaving money on the table and you're going to be able to maximize your marketing dollars by being able to qualify each lead or opportunity to see what is the best fit or the best exit for that particular situation. So for me and my company and my business, every lead that comes across our desk, we're going to make a wholesale cash offer first. But we also know that we're going to be able to utilize a different exit strategy depending on that seller's situation. So obviously, if the seller accepts our cash offer, we are more than likely going to move forward with that option. But there are some cases that that cash offer is going to be too low for the seller, and we're going to be able to utilize a different exit strategy to get that seller a little bit more money, and we'll still be able to capitalize and make a profit at the end of the day. Now, there's pros and cons to all of these different exit strategies, and I'll go through a few of them with you and some of the exit strategies that I use in my company to create deals or create opportunities or turn nothing into something. These are some of the popular ones that I use. So wholesaling is one of the first strategies that I use. There's a few pros and cons, obviously. Obviously, one of them is there's no capital needed to enter the space. You can make a quick profit by closing the deals quickly. It's low risk since you don't own the property. And obviously, it's scalable with the right systems. You can handle multiple deals at a given time. Now, with the pros in wholesaling, there's a lot of competition in wholesaling. We all know that. A lot of people can just enter the market because there's a low barrier to entry or no barrier to entry in this space. So there's going to be a lot of competition. It's inconsistent income. This is why I'm talking about this because if you're only wholesaling, it's going to be a little inconsistent unless you have huge systems in place and a huge marketing team that's pumping out leads and opportunities pretty frequently to your pipeline. Not every deal is going to be guaranteed. Over the last couple of years, we have started to see an uptick in regulations and restrictions on the wholesale industry. Now, another strategy that has become popular over the last year or so that has shown some success is novations. Now, novations also has its pros and cons as well. Now, let's start on the pro side. Just like the example, you're able to offer the seller a little bit more money because you're able to sell the property for a higher price on the retail market. Unlike flipping, there's no need for repairs. So you can take that property as is, put that property in the contract and list it on the market just like that, as long as it's in livable condition for that retail buyer. And similar to wholesaling, it's a low capital investment, meaning you don't need to put up any money to purchase the property outright. And lastly, it's more of a win-win scenario. Sellers are often getting better deals than they would in a wholesale transaction. Now let's talk about the cons. It's a little bit more complex with the legal and contractual nuances than wholesaling. These types of deals take a little bit longer to close due to the inspection periods, the due diligence, the appraisal periods, and financing from the retail buyers. You have a higher risk of fallout because deals can fall apart due to the underwriting or the buyer's loan approval. And most importantly, the success of a novation depends on the current state of the market. Now let's talk about fix and flips. So one of the biggest positives of fix and flips is you can generally get higher profit margin. You have a little bit more control because you're actually purchasing the property and adding value to the property to maximize the profit. And based off of the market, if the market is going up, then that's going to put a boost in your sale price, which means more profits in your pocket. Now, some of the cons with fix and flipping include high upfront costs. You're going to need funds or capital upfront to be able to purchase the property and to renovate the property. Whether you're using your own personal funds, getting funds from a private money lender or a hard money lender, you're going to need to utilize those funds up front to be able to purchase and renovate the property. There's a higher risk of loss. You deal with market shifts, contractors, weather, unexpected repairs, going over budget. All of these different factors can play a role in you minimizing your profit. It is also time consuming. Depending on the renovation, it can take 3 to 6 months in order for a project to be done and be ready to list on the market. Now, this is one of my favorite strategies that I'm starting to implement a little bit more often nowadays because the pros outweigh the cons. And that is creative finance, which includes seller financing or subject to. So with creative financing, there's low capital entry. You can acquire a property with little to no money down. You're able to offer flexible solutions that could benefit both buyers, yourself, and the seller. There's also cash flow opportunities if you decide to acquire these properties and rent them out. And then lastly, there's no credit requirements. Now, there are some cons to creative finance that you should be aware of, that you need to be cautious of and knowledgeable about before you jump into one of these type of deals. So with creative finance deals, they do require more detailed contracts that are put in place to protect both buyer and seller. Being able to gain the seller's trust to be able to move forward with this type of transaction could be difficult because this is untraditional and they're not used to this type of transaction. There is also the risk of the due on sale clause that lenders may request immediate payoff if it's triggered. Those are just a few strategies that I have utilized in my business and have seen success with. As we all know, a lot of people who are just only wholesaling, they have been out of business because they did not adjust to the market. They did not learn other exit strategies. They did not take advantage of the opportunities that came across their desk. If it didn't fit for a wholesale deal, they just threw that lead away. But in my opinion, there's an opportunity to make money with every lead that we get on our desk. We just need to be able to identify what the best solution and what the best fit is for that particular lead. Now, choosing the right exit strategy for you is going to be dependent on your risk tolerance, your budget, and your knowledge of that exit strategy so you can be able to execute it correctly and be able to see some profits on the end. By utilizing multiple exit strategies in my business, I have been able to increase my deal success rate, gain flexibility in negotiation with sellers, mitigate my risk, and also maximize my profit potential. And you can do the same thing. I hope you found this video valuable. Thanks for watching. I look forward to seeing you on the next one.